What if I told you that AMC might just be on the verge of breaking the system, literally forcing hedge funds and brokers into a corner where margin calls are starting, collaterals are melting, and the short sellers who've been betting against AMC for years are finally beginning to lose control? Yes, that moment could already be starting, and in today's deep breakdown, I'll explain exactly how AMC is shaking the market, why brokers are desperately searching for shares, and why all signs point to a massive turning point for retail investors. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But everyone remember, this is not a financial advice video. Now let's rewind to what happened on Friday, the day that started sending shockwaves across Wall Street. The global market witnessed $1.6 trillion in value wiped out in a single trading session. That's one of the largest red days we've seen in months. And yet, in the middle of all that chaos, one stock stood firm: AMC Entertainment. While blue chip stocks were bleeding, AMC didn't just survive, it actually went green, closing the day up 0.68%, and at one point during the session, it was up 2%. That might sound small, but in a market collapse, that's massive strength. It's not about the percentage, it's about what it represents. Because when the entire market is drowning and AMC stays afloat, it's a signal. It's showing that AMC isn't following the usual playbook. The short sellers who have massive positions betting against AMC are now forced to deal with a nightmare scenario. Their other positions across the market are collapsing, and yet AMC refuses to go down. That's pressure from every direction. You see, we've been saying this for years. When the broader market eventually crashes, that's when AMC has the highest chance to run. Why? Because when hedge funds face collateral damage everywhere else, they'll be forced to close their short positions in AMC to stay solvent. And that, my friends, is where the squeeze begins. Now let's talk about something crucial: unsettled shares. A screenshot from the DTCC, Depository Trust and Clearing Corporation, shows billions of dollars worth of AMC shares that remain unsettled. To be exact, the notional value of unsettled AMC shares is $9.6 billion, with an average combined price of 8.72 cents per share. That number is extremely telling. It means that a huge pile of AMC shares, worth nearly $10 billion, are stuck in settlement limbo shares that exist on paper but haven't been properly delivered or cleared. That alone should raise questions. Now, why does that matter? Because during a market crash, collateral shrinks. Hedge funds that borrowed against their portfolios suddenly see their leverage vanish. If their collateral melts while AMC's price starts rising above that 8.72 average, that's when margin calls start firing. And margin calls force them to buy back shares, the very shares they've been shorting. And remember, that $9.6 billion figure represents just one piece of the puzzle. We haven't even included synthetic shares, FTDs, failure to deliver, tokenized versions of AMC shares, and derivative swaps that have been layered on top of this mess. When you add those, the exposure becomes enormous. Hundreds of millions of shares, possibly more, all tangled in hidden obligations. That's why when people say AMC is breaking the shorts, it's not hype, it's math. Let's go even deeper into this. There's been talk recently about AMC authorizing 550 million more shares. Many panicked, thinking dilution was coming. But here's the reality: authorization is not issuance. Even if those shares were issued, they'd barely scratch the surface of what's needed to cover the entire synthetic hole these institutions have dug for themselves. It's like trying to plug a sinking ship with a single cork. The authorization simply gives AMC flexibility. It doesn't mean Adam Aron is dumping shares into the market tomorrow. And even if he did, it wouldn't save the shorts. The exposure is simply too large. Now let's shift focus to the margin call situation that's quietly starting to unfold. According to a recent tweet by a market analyst named Wiz, the whispers are spreading. Margin calls started Friday. The yen carry cracks, Bitcoin pukes, gold flexes, silver flirts with $50. It's not chaos, it's collateral rearranging itself. This tells you everything. When markets start seeing liquidation across multiple assets, crypto dropping, metals rising, currencies shaking, it's a sign that margin desks are being forced to rebalance. That's what happens when firms start losing control. And here's the catch. The same desks managing global leverage trades are also managing AMC and GME short positions. So when collateral dries up, those same desks start tightening risk, selling off assets, and closing positions. That's the chain reaction that could ignite the short squeeze everyone's been waiting for. It's a domino setup. If AMC squeezes first, hedge funds go bankrupt and cause a wider market crash. If the market crashes first, those same hedge funds get margin called and AMC squeezes anyway. Either path leads to the same result. The short sellers lose. And that's exactly why you're seeing panic behind the scenes. Retail isn't selling. Institutions can't afford to cover. And brokers? They're caught in the middle. Speaking of brokers, there's growing evidence of brokers forcibly liquidating GME warrants without consent, as reported by AMC Bigums on Twitter. Investors who held GME warrants are suddenly being told their positions were converted into cash equivalents instead of actual shares. That's a red flag. Why would that happen? Because many of those positions are tied to synthetic shares that don't actually exist. Brokers can't deliver something that was never real. So they're paying cash to avoid exposure, and that right there proves the system is cracking. We've also seen warrants being delayed, another sign of stress. When a broker delays your warrant delivery, it's not a technical glitch. It's because they can't find the underlying shares to match them. They're stuck juggling synthetic paper. To make it worse, the OCC Options Clearing Corporation recently dropped a quiet bombshell. They removed automatic exercise for GME warrants. Translation: the system can no longer guarantee what's deliverable. That's legal language for we can't confirm what's real anymore. So before these warrants were even issued, regulators already knew there was a delivery problem. They quietly adjusted the rules to protect themselves. But that move also exposed the entire structure, the hidden leverage, the phantom shares, and the reality that Wall Street's system of rehypothecation, reusing collateral, is finally coming undone. And through all of this, AMC remains one of the few assets majority owned by retail investors, people who refuse to sell, who believe in the fundamentals, and who understand the bigger picture. That's what makes AMC powerful. Unlike overvalued tech stocks that crash during recessions, AMC sits in an industry that's recession-resistant, the entertainment sector. Movies don't stop during hard times. In fact, people often go to theaters more during economic downturns for cheap escape. Combine that with a loyal retail base that isn't selling even during crashes, and you get a perfect storm. A stock that rises while others fall. So to sum it all up, AMC's rise while the broader market fell wasn't random. It's a warning shot. Margin calls are starting. Brokers are scrambling. Hedge funds are cornered. And every indicator from DTCC data to OCC memos points toward a system under stress. Whether the crash happens first or AMC squeezes first doesn't really matter anymore. Both paths lead to the same outcome, a monumental transfer of wealth from reckless institutions to patient retail holders. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Before ending the video, I want to say one important thing. If you have watched the video till this point, it means you are among those who are true AMC supporters. And for supporters like you, we have created a Facebook group. You'll find the link below. Join the group and become a part of our community. Also, for our community members, we have a PDF book inside the group that explains how to do stock analysis. After reading it, you will become an expert in fundamental analysis. Thank you for watching.